Well, welcome back, everyone. It was a week in markets that was a pullback from very overbought conditions into the end of last week, last Thursday, June the 15th. We did see highs being made in markets. Came back to try and retest those highs on the primary market. The SPY is what you're looking at right now, the S&P 500 ETF. And we did not sustain above the highs made on Thursday and Friday. We pulled back. The follow-through was to the downside for the majority of the week up until yesterday. Some life came back into the market yesterday, opening the door for a continuation higher to start, but it did not. And unfortunately, for those that were looking for that, we did come down and make a move lower. Now we've got what looks like a gravestone doji on the daily candlestick chart, with the SPY ending the week in a negative position, with technical signals continuing to support a continuation lower, but not necessarily one that breaks the entire move. Now, if you take a look at the back end of May, where the last leg up started, so I'm going to take you back to the 24th of May, bottom left-hand side of your screen there, where you can see my cursor moving it around. From there, all the way up to the highs last Thursday, the halfway marker, along with volume profile support and congestion, resides in and around the $427.50-ish penny area. Now, the market, logically, if is continuing to be signaled down, is likely going to be attracted to that area as a magnet. A move down towards that area would very likely resolve with a strong bounce back up, one that could take us back up to the highs that we've made year to date and or potentially higher. Now, in order to get a great idea of what the likely direction is into the beginning of next week, and to offer an idea of this zone being more like support and a springboard back up, I'm going to take you to another instance of wealth charts I have open here with the TRP indicator on it. You've got a daily chart, which is what we were looking at a moment ago. It's got the TRP indications on it, where you get a blue dot below price. It is a buy signal. Above price, a sell signal, and of course target 1, midline, and target 2. You've also got the subchart, and you've got a stop loss as well. Now you'll note that on today's daily candle, we've got a blue dot. Target 1, $421 and about 30 pennies. That's a lot lower than that congestion zone we were identifying. Now, of course, we know very clearly that if we break the daily chart into smaller increments, just to the right of this chart, the 4-hour chart is the next most important time increment. The daily signals out a week to 2 potentially. The 4-hour signals out usually 3 to 5 days. And the hourly chart, which is right at the right-hand side of the screen, tends to signal out 3 to 6 hours. More useful for the day we're in, and if on a Friday, how it's likely going to play out Sunday night futures, Monday morning. So the story, fairly straightforward, is we are on a sell signal on the daily. We've been on a sell signal on the 4-hour since the 20th of June at 1:30 p.m. on that 4-hour bar. Its target 1 has not been met yet, $430.91. Target 2 is down here at $424 and about 60 pennies. And you'll note that the midline target, which is an area that statistically we more often come to, and that's the move, well, it is right smack dab on the line that I just gave you, give or take a quarter. And it is in that congestion zone where we would expect a bounce back up. The signal state does continue to support a continuation down. We're still in a robust up move in the market, but you can draw all sorts of uptrend lines and whatnot, and it'll tell you that some of those lines are broken. However, the channel part of the TRP toolkit is an rising support underneath price, and if you take a look at the channel bottom on the 4-hour chart, it's sitting at around 429 and about 75 pennies. And then you flip over to the channel top on the daily chart, it's closer to 427. That would be a support range overall between these two time frames. The signal is down, the targets are clear, the zone of support has just been identified, and now it's up to what's the likely outcome directly into that close, into that open, if you will, Monday morning. And the likely direct outcome based on the hourly chart signaling down is a continuation down. Now, the idea, though, is come down into support, bounce up off of it would be the likelier way it plays out. Does it come down to 430 or down towards 427? Well, we've got a support zone identified encompassing that entire area, and the signals do support a move down to that area, then a bounce. The only other alternative here is we would need to see a robust rise in the market that takes us well above $436 to start the week, and then the signal structure would change markedly. Would it be a high probability one based on how we've left the week? Probably not, but that is yet to be seen. Now, tomorrow morning, if you've liked what I've just taken you through here on the SPY, I am going to be doing a class similar to, but also very different from the one I did this past Wednesday. The class is not recorded. It goes live at 10 a.m. Eastern Time tomorrow, 7 a.m. Pacific. It'll run for about 2 hours, and my objective in that class is to show you straightforward strategies like you just saw to call out a direction, set up a plan, and then, of course, execute on individual trades. I'm going to be including things like multi-time frame, the intermix of how TRP works with the other technical tools, and, of course, scanning to identify things that are running away in the direction the market is either turning up into or turning down into. It's going to be a great educational session. I'm looking very much forward to seeing you there. Simply go to becomeabettertrader.com/go, and I'll see you first thing on Saturday morning, June the 24th, tomorrow at 10 a.m. Eastern Time. Have a great rest of your day, and thanks for watching.